हाँ मैं रिकॉर्डिंग भी कर रहा हूँ। स्ट्रीम क्वालिटी ठीक है। आई हैव बॉट नाइट्रो तो साफ दिखाई दे रहा होगा। नाउ सो वेलकम टू द फर्स्ट क्लास ऑफ द मास्टर प्रोग्राम। ठीक है। आई डोंट नो ये मुझे ड्रॉ क्यों नहीं करने दे रहा। ठीक है तो क्या हो गया इसको। So welcome to the first class, and what we are gonna be doing. क्या हो रहा है ये क्या क्या खोल रहा है। Okay, fuck it. So welcome to the first class. And first let's just understand ki what is the purpose of this entire thing, right? So I think the first thing is that most of you know the concepts, right? Uh, but there is a gap between how to actually use them uh, and what they actually are, right? So, for example, we all understand fair value gap. Even if you don't, it's all right. I will be explaining the most basic concepts dubara again and again, so you don't have to worry about it. And how do you actually use them in the real markets, right? I want this to be the main focus of this entire thing. The second thing is trade breakdowns, right? So trade breakdowns basically are trades which I have taken the entire week, and I explain why I took them, how I spotted them, and why did I do particular things in that trade which I would not do in other trades. So that is the edge part, right? Lastly, once you understand these concepts, how to use them, and then you understand how I am able to form my own trades, you can combine these two to make your own model. This thing here, your own model, is the only thing in the world which will consistently make you money. I could hand you out a model right now, right, which might work for a day or a week or maybe even a month or maybe even 6 months. But after that, it will stop working and it will be useless, and you will end up uh, coming back to the whatever mentorship you have joined. But if you understand the concept, you understand how someone profitable thinks, and you combine that, you arrive to a conclusion, okay, that the model which exists is actually just a bunch of set of rules which are more focused on risk management, which are more focused on understanding how to actually use your funded account rather than a set of instructions to place a trade. Once you have your model, right, you are immune. That means, of course, you will take losses. There might be months where you see drawdown, but at least for me, once I've understood that, okay, I have my own models, I understand how I'm supposed to be trading. The only red month this entire year for me has been October, which I think is pretty decent. I made money 11 months, and just 1 month I did not make any money. Okay, and I did lose money too, because here I wasn't following my model. I wasn't following what I knew. I was trying to follow a very mechanical way of trading, and that does not work out very well. Now, since we have understood the objectives of this mentorship, we are going to focus on some of the key concepts which I use, right? That is the most important thing uh, to understand, which are which is the concepts which I'm using and how am I actually applying them. So, uh, some of you may know that I use ICT concepts. Now, within ICT concepts, there are multiple ways people look at them. That you can either know everything, right? Or you can know the useful stuff. Now, in order to, get to the point which things are actually useful and which things you should not be using, the best way for it is start with two or three things, right? Uh, just one more thing, that Be sure that you're watching the ICT 2022 mentorship. This is the basis of everything which I do. Even though it is long and it is boring, and even though I'm gonna cover it myself, if you watch it directly from the source, you're of course gonna find something new, something maybe which even I haven't found. So do watch this. Now comes the most now right there are a lot of things, and then there are some useful things. Now these useful things are useful for me. So out of everything which ICT teaches, my main focus is on liquidity. It is on fair value gaps, IFVGs. These two go hand in hand for me. Order blocks and breaker blocks. Right? I like to combine all of these concepts with midnight open and 8:30 a.m. open. Now I will explain every single concept which has been mentioned here in each class. Then comes your of course your order flow. Where is the market trying to go? And for order flow, so a lot of people when I say order flow, they assume that I'm going to be using, I don't know, the volume profile or an indicator or a tool. But in reality, you don't need those tools to understand order flow, right? Uh, what you need to understand first is liquidity, right? Uh, and you're gonna realize that uh, most of the time, some I may not have the perfect definitions, right? I may not even have the right definition, but the way I use them, they just seem to work. So liquidity, right? Uh, if you might, if most of you have studied ICT or at least seen about it, and everywhere the most common thing is liquidity, like the a sweep of a high or a low is always expected before we take a trade. The biggest confusion which people have with liquidity is what liquidity to mark, which time frame to mark, and what to do if it's not going according to plan. So, let's think about it in terms of scalping, right? Since I'm a scalper, my most of my trades are 1:1s. Some of them are negative, and some of them might be 1:2. Despite trading all the RRs, I like to keep my liquidity time frame fixed. Now, why do I keep it fixed? First, it removes all the noise from the chart. Now, if I go on the 4 hour, right, and if I'm analyzing the 4 hour, and let's assume, okay, I'm just gonna open MNQ because this one is cleaner. I don't want to remove the data from there. Okay, if I open the 4 hour chart and I tell you guys, okay, I'm gonna target a 4 hour low or a 4 hour high, right? Let's assume this and this low. I was targeting this low. Chances are that I see the order flow and I try to take a trade because let's assume that okay, I'm targeting this is the liquidity pool. I'm expecting this liquidity to be taken out and I'm trying to, trade this. And on the 4 hour, it looks okay, it should go back down, right? But we have to remember we are intraday trading. We are trading um uh maybe the highest time frame which we are gonna be trading is maybe the 5 minute. Nothing more than that. Best case, like the worst case scenario, I'm gonna tell you, maybe the 15 minute. Right? 15 is the highest, but okay, I have never traded the 15 minute. Uh, but assumption when our whole assumption is that we are gonna be trading, let's say the highest is the 5 minutes. Why should we bother with what the 4 hour wants to do? Unless there are specific conditions where we will check the 4 hour. But for now, just know that entirety of our liquidity will be marked on the 15 minute. 15 minute is the only time frame where you will look at liquidity. The only time you want to switch higher if there is no nearby 15-minute liquidity pool available, which is very rare, right? Which is like one of the rarest things which can happen. Now, liquidity can exist in different forms. One is the high, right? One is the low. Now, when I say high and low, just just know this, these are intermediate terms low highs and intermediate terms lows. Now what do I call them ITM, right? So now what does that mean? I will explain. So these are the two types of liquidity. Then their liquidity can also exist in forms of inefficiencies. Uh, for example, if a fair value gap, right? An order block, even a breaker or a volume void. But every single one has different importance. Now, why do I call these things liquidity, right? Because the assumption is always that if a high gets taken out, it's gonna target a low. But how many times has it happened that when a high was taken out and you were targeting a low, it never went to that low and it took support from a fair value gap, order block, volume imbalance, or maybe a breaker and started going up again. Even though the purpose of a high sweep is to take out the low, that is what we learn. But it took one of these three things out and started reversing. Well, just think logically. The purpose of a high, a sweep of a high, or sweep of a liquidity is to target opposing liquidity. It did target the opposing liquidity. You guys just missed it. When you do not pay attention to these things, these small things, what happens is that you can take a winning trade and turn it into a losing trade. Now, for example, right? Let's focus on the highs and the lows first. Uh, so an intermediate term high basically just means that there's one high, right? Which when you look at this is the right side, no, this is the left side, where the left side and the right side, both the highs are lower than this high. The easiest way to do it is what I do. You take this indicator, right? Change this to 3. With wherever it marks an arrow, that's a liquidity, which I'm most likely gonna mark. If you look at my charts, I don't mark them because I can see it on the 15-minute essay, so there's no point. But yeah, you can use this indicator and you can very easily mark them. So, what we can do is let's understand which time, right? So one is the time frame and which time do I want to be marking. Ideally, what I like to do is that I take the 9:30 open and I just mark that and I look for liquidity before that which are close by, right? So for example, this is the most obvious one, then is this one, right? This one was already taken out at 9:30, so something below that would be this. Now, do you see that the indicator hasn't marked this, but it is, right? This is an intermediate term low. So when I say I'm marking liquidity, I only want to mark uh, the intermediate terms highs and lows before 9:30. Now, automatically, my brain will work like this. That I assume that if this gets taken out, my next target becomes this low. If this is my next target, will what is there to stop this price? What can stop this price, right? And if you just look above, there's this fair value gap. And if you do not know what fair value gaps are, I will explain them, but just know that this is a gap, right? Um, quick definition time. A fair value gap is a three candlestick pattern where the wick of the first candle does not overlap the wick of the third candle. You see the wicks are not meeting. That gap is called the fair value gap, right? The only thing which can stop price or push price up is this, right? And now this works in a very interesting way. Now imagine that I come in at 9:30, right? And the first thing which I see is price pump up, right? You see, now this is how I captured that shot. Price started to go up without sweeping any lows. Do you see? No lows got taken out. Ideally, this low should have been taken out. If not this, right? If not that, at least the 5-minute low should have been taken out. And when I say the 5 minute low, I mean this one. You see this one? This is again an intermediate term low, right? If I go into the 1 minute now, right? And just look at this. The low was so close, yet the 9:30 a.m. candle did not take out this low and it started going up. It went up, it took out this liquidity. Was it a 15-minute liquidity? Now, this is where the discretion part comes in, right? So if it has not taken out a low, right? Uh, and it is going up to target some liquidity, it does not need to target that above liquidity, right? Because the job for me, for what I understand with the 9:30 open, is that the purpose of it is to take out the nearest available liquidity. My mind said that okay, this is pumping. This pump should have been insane and should have taken out this liquidity. It did not, and it started to dump. Now, if it is dumping, right, till where can it dump? I would automatically assume this liquidity. It's gonna dump at least till this liquidity, and if there is anything for where price can stop, uh, for me, the only place where now price would stop would either be that this liquidity gets taken out and we get to pump up, or by chance, the 15-minute fair value gap which we had marked, that actually ends up holding. So how do I decide whether to take the trade or not? Well, just think about it like this. I am confident that this low has to be taken out. I do not, I am confident and my safety precaution is this low, right? This should be the area where I need to be careful. You see, price dumps, creates the next candle, and had it been a sweep, in my mind, it would not have gone below this price. But price ended up closing below this. What I instantly expected is that because there is this inversion, so this is a fair value gap, a bullish fair value gap, which failed, so it became an inversion, and price went back down. I went back down, close below this. Now I'm more likely to see some sort of rejection from this area. I may be wrong about this idea, but I'm definitely very confident that it's going to give out a reaction. Now, when I say a reaction, that reaction usually means that it's going to give me 10 points. If it is going to give me 10 points and there's increased volatility, right? Uh, this is the MNQ, so the prices are a bit off. Yeah. So I know for a fact that this is gonna give me some increased, there's increased volatility. It's gonna easily give me 10 points. Even if I'm wrong about my DOL, uh, the reaction should be enough. And that is what happened. I entered the trade for 10 points right here, right? You see how it tabbed, gave me an entry, straight up rejection for 10 points. The moment I saw that reaction, you know how instantly it went down. If I go into the 30 seconds, right, it will be even more cleaner, right? The moment, okay, I can just switch to this now. I have marked the trade, right? The moment I saw, so I was looking at this within in the 30 seconds chart. I saw the tap. The first 30-second candle actually gave me 10 points. I should have been out, but I wasn't. Why? Because in my mind, this rejection was so clean that I knew that the purpose of this order block is to take out this low, right? Because this is a liquidity which got tapped. Now this liquidity is going to target some other liquidity, which is this. But yeah, me being me, I do not like to target the wicks. I like to target the bodies. And because of the consistency, we only took $500 on this trade. But potentially, if it had been a no consistency account, this is what my trade would have looked like. Now, how do I safeguard myself from getting faked out? It had given me my 10 points. Uh, the moment it gave me my 10 points, I actually went break even without thinking. I did not think twice. I was like, okay, if it has to go, it will go. It will not retest the area. Even if it does want to retest the area, most likely it's gonna at least, you know, tap this area. You see this, even though this is not an order block, this is nothing. What I like to see is that had this been a green candle, this would become an order block. Just because this wasn't a green candle, this isn't an order block, but these areas do end up giving some respect for some odd reason. So what I like to do is I like to assume that okay, if price has to retest it, it is only going to retest it from this area. Even if it does that, right? I'm getting like 18 points. The moment it had given me 18 points, I had again trade my stop by 10 to 10 points right here. Uh, in such volatility, like because here every single candle which was being printed was at least of 15 points, right? I do not like to, lose out on my winners at all. So it became it became very easy for me to determine that okay, it has gone 18 points. If it wants to go, it's gonna go straight up. It's not gonna retrace. I'm gonna trail to 10 points from my entry. So 10 points was this. That means my stop actually became this, and I'm trailing this, and the next candle actually gave me my target right there. It actually hit my target. I never got stopped out on this trade. Uh, and yeah, that was a quick trade breakdown as well. But do you see what I did? Because the first time में whatever liquidity I had decided was not swept, right? And the second thing which it failed to do, right, was take out any lower liquidity before pumping up. Now look at this part, right? How did we expect the price would pull back up, and we ended up even catching the longs that day? Well, I did not, Abhinav did, but it was actually fairly simple. Price went back up, rejected, uh, and now what ideally this short should have worked and taken out that liquidity pool, right? The 15-minute one. If I go on to the 15-minute, I'm gonna switch to MNQ because वो वापस से साफ है. Uh, it should have taken out this one, this low. That's the most logical thing. This is what is expected of it, right? What happens is right here. This is actually uh pretty interesting, right? So now if I want to play the continuation move, I have two options. Either I can take this block, right, for 10 points. It taps, next candle prints, and what? I don't think it gave us 10 points. I have no clue. I don't think it gave us 10 points. Whatever. The reason I did not take this trade was just very simple. In my mind just told me that the way this block is gonna get tabbed, right? And this liquidity, right? This one. You see this high. It is way too clean, right? If I'm expecting a dump to this low, there surely will be a higher pullback than this one. Because this pullback actually ended up working out, and we still haven't taken out the liquidity. Because what is the purpose of what did we decide? That if this low gets taken out, right, then it becomes a fact that this high has to be taken out. But once this low got taken out, price actually went up. We scalped this down move again. Now price is again going back down. Uh, so why hasn't it taken out any liquidity on the upper side on the 15-minute time frame? So I just thought for a moment that what could actually form here. So you have to start imagining things, right? You play on some expectation. So I'm just gonna remove this, right? If I just clear this entire thing, right? If I show you this, right? So far everything is bearish, right? We enter this trade, right? It most likely gives you 10 points. I did give you 10 points. This gets tabbed and you get 10 points, right? Now just imagine this. You scalp this. Most likely, I might have scalped this. I did not, but because my mind just told me that okay, I'm just gonna wait for this. If this has been tapped, that liquidity is so close by, it should never come back to retest this area. If once it came back to retest this area, I'm not gonna re-enter here. I might take an entry here. The only reason I will take an entry here, okay, yeah, I remember why Abhinav and I took this shot. Uh, Again, uh, I will explain order blocks, fair value gaps in detail, but right now the concept is liquidity, so I'm gonna focus on this. Just know this is an order block, right? This order block gets printed here. This short is only valid if price does not take out this low. So do you see price opened here, it goes up first and then it goes down. Uh, that is why he took that shot. Yeah, I remember it now. Once it did that, it should have just continued going lower. If it is coming back to retest that area, that means I'm not going to take a shot there. I'm not going to trust this fair value gap. But what I'm going to assume is that if I can get an inversion of this fair value gap, then this high becomes my target. So the next candle, this candle inversion, you will enter your longs here. I give a 20-point fixed stop, right? I do not, because my assumption is that if it goes more than 20 points against me, I'm wrong anyway. Uh, this, so, and where would you go break even? Again, that's up to you. I like to go break even. If I'm taking an inversion entry, I like to go break even once it gives me 15 points instead of 10. In such a scenario, it is good to go break even within like 15 points, because if it wants to pump up, it's gonna pump up without any issue. So right there, it has given 7 points, and this one would have been your TP. What Abhinav did was here, because he had gone break even, he decided to hold this trade till here, which was a very smart move, and he ended up capturing this. So do you see, I entered with a 20 points stop loss. I was targeting 10 points, but obvious draws were formed. Here, I would have exited. I do not like to hold for so long. I do not bet on the fact that it's going to go here. It might some days it might not. But do you see that we still got the 1:1? We took a negative RR trade. We turned it into a 1:1 because there was one more draw available. We could easily turn it into a banger of 1:2. Okay, Abhinav did hold it way higher because he was on a single account. Realistically, none of us, even me, are not going to do that when we are trading multiple accounts. Because this amount of money right here, this is $400. This alone is $400. If I make $400 in a single day, I'm not touching that account. I'm not. The only time I might consider that is that if I'm getting to trail my stop. Now the other way to treat it is very simple. That okay, it gave me 20 points. I do not want to exit. I am confident about this. I'm gonna trail my stop to 10 points in profit. So my new stop will become this. Now if it goes, it goes. If it does not, it's alright. So 10 points it takes me out, but goes up. But you still book $200, which is not bad, right? Uh, that is like how I do it. That's why I seldom catch any 50-point moves. The maximum which I go for is 30 points anyway, because $600 a day is like all you need. $600 on a very good day is good. $400 on any day is good, and a $400 loss on any day is good. Just think about it like this. Uh, all these three conditions are very good. The only condition which is bad is you're taking $1,000 loss. Rest, even some losses are good losses. A $400 loss is a very good loss. If I can get it down to $200, then that's even a better loss. But you see, my entire idea is based around liquidity. And you have to understand the psychology behind that liquidity. If this has to be taken out, this should have been respected. This should have had been respected and price should have dumped. If it did not, they become targets. How many of you did actually get faked out with this fair value gap or this order block? That you entered this trade thinking it's going to go lower. Did anyone even trade this thing? Anyone tried that shot? So, yeah, now imagine this. Liquidity was close by. This would have given you 10 points for scalping. This might have worked. But your first assumption should be, if this thing, if it wants to go till here, you have two options, right? This is going to get respected and I can find a new block and I can short that. This is a safe shot. If you try to short it directly here, chances are you're going to get faked out because you do not know if this liquidity will be taken out. Now, why this liquidity won't be taken out? The biggest deal here is that price had pumped up, pumped down. It was pumping down. The pump suddenly stopped. Just look at this pump, right? Huge pump. It has retraced. It is pumping back again. Why is it trying to give me an entry? It should have gone directly. Remember, always think that in your best trades, you're not getting your fills. So why is it offering you a price here when the draw is so close? So automatically you expect a pullback. Pullback comes, price goes, takes that high out, keeps pumping on the 1 minute, right? Now. Just if you were paying attention to 15 minute yesterday, this 15 minute got taken out, right? Uh, Now and this 15 minute, right? This is where there is a lot of confusion. Do I go long or do I go short? Here, I don't do anything. I just let it be. Because now the issue is we have pumped so aggressively up that trying to short this would be suicide, right? Unless there are very specific consequences. Unless there's something very specific. For example, there was a liquidity sweep, price displaced so aggressively on the 30 seconds, it had, you know, uh, manipulated this, inversed this, there was this order block, had the 5 minute not been tapped, right? So the 5 minute candle was forming when the idea, okay, and I'll tell you how I use gaps too. So the moment, now the only time I was willing to short this was till this low. So the moment this candle got printed, this is where I was like, okay, this is the potential short. Now remember, these are the trades which I'm thinking about taking, but I'm not taking them only because I have already made money. If I have made money, I'm never going to risk my account, no matter how good the trade is. And trust me, I got a lot of banger trades on Friday, and I did feel bad that okay, maybe I would have made a bit more money, maybe I would have made $1,000 extra. But why should I risk my account when I have made $400, right? Because it might work out today, but tomorrow when it does not work out and I lose those $400, I'm more prone to go on a tilt. But again, liquidity, right? You see a structure like this, right? Where the order blocks get formed and there's a low there. You can 10 on 10 take this shot every single time. This is going to give enough of a reaction to take out this low, and you can give a 20-point stop, right? If it has to be taken out, it will be taken out instantly. Now this is where the entire confusion kicks in. Now does it go up or does it go down? And everyone got faked out here. I'm not gonna lie. Even though there were certain conditions which were met to tell you that it is actually gonna go short, but even I got faked out here. So the idea was that if it wants to go higher, it's gonna respect this 5 minute and pump till this higher liquidity. If not, then at least till 50% of this range of this wick. So you can, okay, I will come back to this idea, the 50% of the wick some other day. I know I have to teach this, but right now just explaining how I was looking at liquidity. So I always imagine that price is gonna respect this. If this gets respected, this high becomes a target. If this high becomes a target because it was a huge wick, I can at least target 50% of this area. And I think we all got faked out here. Price went up, creates this fair value, this order block, taps it, and yeah, that was the fake out. And how could we have avoided this fake out? Okay, it did give like 25 points. Okay, this honestly, the thing is, it did work out, but trust me, this is not the type of trade which I would like to take, right? Uh, Only because यहाँ पर मैं खुद confusion में बैठा हुआ हूँ. Where would I try, where I would want to long this if price can go above this area. If price goes above this area, जो ये wick है, right, and it keeps running, it keeps just going up. This is where I want to long it now. I don't want to long it here because you see my odds are 50-50. It can either respect this and go up. It can either respect this and go down. Why should I trade here? There is nothing. It may look there is something, but there isn't. Other consequences do exist. A lot of people on Twitter said this was a very obvious short, that you could have just shorted this. There was this inversion here, and a lot of us considered this. But trust me, you're not gonna spot it. Even I couldn't spot it, and I've been trading for so long. I thought about it, but thinking about it and actually taking the trade are two different things. I know for a fact which trade I'm gonna take, even if I don't take it, and I know for a fact it is just an idea. That differentiation is gonna help you out a lot. So, for example, price goes and it inverts this fair value gap, right? This inversion, let me tell you, this inversion is not enough for you to go short. Even if you go short, for example, if you went short here, right? You can only target this low. If you have to go break even at that point, because it is tapping a 5 minute, it is taking out internal liquidity. It can easily come back up, and see that is what happened, right? Okay, that did not happen. This was a very special scenario, right? See, even this is like Friday's market, and I really expected it to go back up and tap this or take out this high. Why? Because that is what the market does most of the time. Yesterday on Friday did not. And if you get into that habit, right? If I ended up capturing this short yesterday, right? I would have made money that particular day, but I wouldn't have been able to keep that money because this thing does not work out every single time. That there's no pullback after taking this low out. There's no pullback into this FVG. Price just straight up dumped. This is very rare. This is very this is just gonna happen sometimes. It's not even profitable for you to do it. I know about the SMT with ES. I know, I studied it very well. The the issue is that here, if you are gonna enter, you can't give a fixed stop loss of 20 points, which I give, right? So if the trade does not allow me to give that 20-point stop, I'm not gonna take. What would I rather do here? Now this is what the smart play here exists. Uh, and this is, I called this one out on Abhishek's live stream too. Now, see, and this is where you should not get the FOMO. See, at this point, right, where is your liquidity, right? It would be dumb to think that this entire liquidity is going to try to give a reversal. If the reversal had to come, it would have came from the 50% of the range. It did not. What is left? This gap. What is the purpose of this? This gap has been tapped. It wasn't tapped on MNQ. On NQ it was tapped. Right there. Yeah, this gap was tapped. I think it was even tabbed. I've been marking it wrong. Now, this is where you just remember one thing. If price has fell so hard, price is going back up, there is no fucking chance it's gonna retrace entire 300 points. And ये इतना ज़्यादा अच्छी trades देगा तुम्हें यहाँ पर, ठीक है? Now, what I want to do here? I want to do two things here. I want to try longing this, and I even want to short this. Now, where would I long it? Is at a pullback. For example, this did not inverse this, and this was such a clean trade. 30-second. Now, why did I say that you can easily long this? Was only because of this liquidity pool. Just because of this and this one. You could go long here. Okay? You go break even the moment this gets taken out. And you give a 20-point stop. Not even a 20-point stop. You actually supposed to give like a 18-point stop. I gave a 21 because it was rather easier. Bola. You go break even at this because I'm only looking at how aggressive price is pushing up. If there is this aggression, it did this drop of retracement. Now it's gonna keep continuing down. Price पहले ऊपर आई, ठीक है, फिर ऊपर गई. इसको take out की, it gave you 20 points straight up. Even after that, it did not ever come back. And it was an insane trade. I called out this long, and I called out the short. Now you might think कि अच्छा मैंने ली नहीं trade. I could not because मेरे पैसे बन चुके थे. And that fucks. I hate that about let's say the accounts, that if I have made money, I do not like to trade it again. I do not like to touch it, those accounts. And even though on some days it does hurt me, like for example yesterday on Friday I would have made a lot more money. I would have made like $400 here. I would have made $400 upper or and 400 more. It could have been a $2,000 per account day. It could have potentially been a $16,000 day for me, but it wasn't. Now, now, because I know this is not the right time to do it. January है, अभी the more important thing is locking payouts than making more money. If my payout is of $1,000, I'm gonna take it. If it is of $800, I'm gonna take it. Even if it is of $500, I'm gonna lock it because this month is all about gaining momentum. Okay, coming back to this. Now, just focus on liquidity, right? The, uh, now, this is the other fake out. Why was I able to spot it? It's a lot of experience. Everyone expected this fair value gap to get tapped, right? If this gets tapped, liquidity to liquidity, this becomes a target. This was actually tapped. No one noticed it. It just wasn't tapped on NQ. It was tapped on ES. If I go into ES, you see it was tapped. If that is tapped, I assume it is tapped on NQ too. That just means we are very bearish. If I can get an inversion, ठीक है, on the 1 minute, don't look at the 30 second, I want the 1 minute inversion, which would be somewhere here. You see that inversion? Fuck, let me mark it correctly. There. This. You can short it instantly. Just the next candle. And do not give a huge stop on this. Because ऐसी condition पे, if you're right, 20 point is gonna do the job. Because the next candle is gonna be your TP. The next candle is gonna be 20 points. The same candle was 20 points. Just think about it. You hit your TP right here. You can extend it till this row if you want. No one is gonna extend it till here. I won't. ठीक है. I personally won't. Even if I'm confident I won't do this thing unless मेरे पास बहुत फालतू के accounts है, I won't do it. But my target will always be like 20 points. I'm just gonna scalp a 1:1 and I'm gonna be away. Of course, if it fell so hard, I might consider going for 30 points. More than that, I wouldn't. I won't lie, I wouldn't do it. V-shape reverse ऊपर जाएगा तो क्या enough है एक inversion सोचने. Okay, this wasn't a V-shape reversal. See, V-shape reversals are followed by inversions of fair value gap, right? In the lowest quadrant, where your order blocks are formed. You see this? Where is my curve, right? The area where the V-shape was supposed to form, it never formed that V-shape. It formed nothing. It went down, it went up. Here, there was no inversion of fair value gaps in this consolidation. Whatever inversions did happen, happened here. And those inversions did not hold at all. Why do I say they did not hold? Because on the 15 minute, it was obvious that it wants to rebalance this 15-minute fair value gap. The moment that gets rebalanced, there is an SMT here, right? This was an SMT with ES. There's one more inversion taking place here, and more than that, if I go on to the 30 seconds, there were multiple inversions taking place now. It had already inversed this. What was my order flow? Order flow, which I will come back in the next class. And I will explain that this short was not on the basis of this inversion or this inversion. It was a mixture of all the concepts coming together and it formed a very good trade. And this trade was way better than this trade. Yaha, it was 50-50. This wasn't a 50-50 trade. This was a very good trade. This was like easily catchable. But the fact is, most people did not survive that day to trade this. Most people tried to short this here. They tried to either maybe long this. Everyone was out. That is why this entire move came. Once this entire move came, everyone either tried to short it too early and this kept getting out from their shots, thinking that it's not gonna work, right? Or they tried logging it. Now, when that happened, this moves become way cleaner. Now you won't expect one more manipulation. Why? Because जिसको भी निकालना था वो निकल चुके हैं. जो लोग शॉर्ट गए थे, तुम्हें लगता है वो इतनी रिट्रेसमेंट होल्ड करके बैठे होंगे. जो लोग लॉन्ग गए हैं, बस वही बचे हुए हैं. ठीक है, शॉर्ट वाले अगर उन्हें निकाल दिए, SMT भी हो गई, फेयर वैल्यू गैप भी टैप हो गया. नाउ इट इज वेरी इजी टू अज्यूम दैट ओके इट वांट्स टू फॉल. Where will it fall? I do not know. I just know that I'm getting a good entry. I'm getting a low. That low is my DOL. If it gives me 20 points, well and good. If it gives me 30 points, amazing. If it gives me more than that, Right now, I do not capture more than 30 points, so I'm not gonna say that go for it. That is something which Abhinav will teach you guys, right? How does he end up holding his winners for so long? Something which I lack. Um, I focus more on consistency. That I'm more than happy capturing 20, 20, 30, 10, 20, 30 consistently, rather than, any single day I'm missing out on a 20-point winning trade because I try to catch 50 points. So sabka is a way of trading. Mine is very conservative. I just want my payouts. I just want to make 20 to $30,000 a month. Oh, above that, the only time when I think about making more is अगर मेरे बैंक में भाई 50 लाख पड़े, I very happily go and try to make more money. अगर मेरे पास liquid 50 लाख नहीं है, I do not want to make more money. I just want to make as much as I'm making until that amount is built. Okay, but that is like psychology. That's again different class. So the idea, did you understand liquidity, guys? Like, thoda, at least. Ah, okay, I have recorded it. Uh, and I'll upload the video. Aj. See, name. You will never know what a good DOL is. ठीक है, मुझे खुद नहीं पता होता. What I do know is that मैंने दोनों साइड के DOL मार्क किए हुए हैं. My focus is to play the price action telling me which side it is going. If I mark, let's say, a bullish one and price keeps going down, I will only think about longing it if I'm getting the confirmations. If I'm not and getting back to back shorting confirmations, either don't trade that day or just change your bias for some time. Pankaj, I know, no, I'm looking at it. I've seen a few things. I'll hit you up. Yeah, I have recorded the class. I have recorded it. I'll upload it. Okay, yeah, yeah. Uh, Unfollow Sandy. Uh, for definitions, uh, let's. I I'll just send you a list of videos. Just watch those, right? Because then I can explain them in detail. If I just tell you the definition of a fair value gap, right? So fair value gap is a three candlestick pattern where the wick of the first candle and the wick of the third candle do not overlap, like this. This is a bearish one. For the bullish one, it's the it's a three candlestick pattern where the wick of the first candle does not overlap the wick of the third candle. This is a fair value gap. Above this is a fair value gap till here to here. I can combine them both if they're back to back. But I'm gonna send a list of the concepts that you guys should understand and use. And then when I explain them in detail, it will be much easier for you guys to understand. Vijay, would you say this is your model? DOL, PDR is comparing you weight on everything. Exactly, yeah, Vijay. Almost that is that is it. That is it. Infinity. Okay, I'll do this thing that from next time I'll do both, a mix of both. Okay, I'm gonna stop recording now because this has overstretched a bit. I want to keep these sessions like within 30 to 40 minutes. Uh, and I'm so for the recording, I think.